XDC is a decentralized, open-source, and community-driven blockchain platform. Let's explore the innovative features, use cases, and benefits, and how it is revolutionizing the future. XDC is an EVM-compatible Layer 1 blockchain successfully running since 2019. It is a hybrid network that combines both public and private blockchain with interoperable smart contracts. It is built to meet the demands of real-world asset tokenization, modern finance, and global trade. Scalability is a fundamental strength of XDC. Powered by the XinFin Delegated Proof of Stake, XDPOS consensus mechanism, and innovative architecture, the network can process up to 2,000 transactions per second, ensuring efficient and fast transaction settlement and enhanced performance. As the network evolves, it will continue to enhance its scalability and performance to meet the demands of all use cases. XDC simplifies cross-border and domestic transactions by eliminating intermediaries, thus reducing costs. The highly important global financial messaging ISO 20022 standard works effortlessly on the XDC network, enabling an advanced instant settlement solution that allows digital assets to be included in a message's payload. Payments also provides transparency and immutability, allowing all parties involved to view and track transactions in real time. This enhances transparency and reduces the risk of fraud or errors. The XDC network is designed for enterprise use, offering real-world decentralized applications that meet the requirements for businesses, organizations, and governments, such as smart contracts functionality, privacy, identity management, and regulatory compliance. Moreover, by connecting various blockchain networks seamlessly, it promotes seamless interoperability and facilitates integration and data exchange with private chains or subnetworks. This positively impacts the industries globally and makes the network suitable choice for sectors like finance, supply chain, trade finance, legacy systems, real-world asset tokenization, and more. Additionally, XDPOS2 is the most energy-efficient consensus that actively supports sustainability by enabling transparent carbon credit trading, contributing to a more environmentally friendly future. XDC Network has a thriving ecosystem supported by a diverse community of users, developers, enthusiasts, and industry experts. Through strategic partnerships with leading organizations and technology providers, XDC expands its ecosystem, fostering innovation, cross-chain compatibility, adoption, flexibility, and liquidity. With its scalable architecture, fast transaction speeds, low fees, robust military-grade security, cross-chain compatibility, and cost-effective enterprise-grade solutions. To learn more and stay updated, visit xinfin.org and engage with our community via xdc.dv. Together, we are shaping a decentralized and interconnected world.
Hi, welcome everyone to another episode of the XDC APAC podcast. I'm Sunny Mohanty, Head of Ecosystem at XDC Network, and I'll be your host today. So on the XDC APAC podcast, we bring together, just giving you a little bit of context about the podcast, we bring together founders, builders, and industry experts to explore the technologies, products, and ideas shaping the XDC ecosystem. So today's session is designed to be educational and transparent, helping our community better understand one of the most talks about areas in blockchain, which is liquid staking. So joining me today is Arturo Cantera from PrimeNumbersLabs, the team behind Prime Staking on the XDC network. Together, we're going to take a deep dive into how XDC liquid staking actually works, where the staking yield comes from, how the protocol's non-custodial design keeps users in control of the assets, and just as importantly, what the potential risks are. Just to give you a little bit of stats before we deep dive, with over 232 million XDC already staked across approximately 279 wallets, we will be discussing a live protocol that's already being used by the community. And again, this is not a promotional session or a financial advice. It's an opportunity to ask neutral questions, get honest answers, and help everyone better understand the mechanics and the trade-offs of liquid staking on XDC network. Arturo, welcome to XDC APAC podcast. It's great to have you with us today. How are you?
Hello, everyone. Thank you so much for inviting me today. And it has been a long time already on XDC, and we build quite a lot of solutions. So this is one of our solutions, Prime Staking, that is liquid staking. And we are here today to talk about it and the changes that we did since the last few months, and the new release that we just did, moving to non-custodial as we are
Right.
going to see.
Yeah. Would you like to introduce yourself, your role at?
Yeah.
Yeah.
Yeah, so I'm Arturo Cantera for the people that doesn't know me. I started in crypto really early in 2013. I was buying Bitcoin, but then I started full time in 2016. So in 2021, I founded my first company on XDC. That was PrimeNumbersLabs, and we started building a special type of staking using NFTs and our token. And from that idea, we grow the company and the protocols to the thing that we are today as a liquid staking, that is Prime staking, and also a lending and borrowing, that is PrimeFi. So yeah, this is a quick summary about all of the things that we have been doing the last few years. Also, we are like really deep into the masternodes on XDC, and we have the whole infrastructure to check how the masternode works. It's also live on the node platform that we have.
Sure. Yeah, we'll get into all these details in the session today. Let's just start very simple today, Arturo. So, at the very basic level, what is Prime staking? Who built it? And what problem does it solve on XDC?
So Prime staking is a liquid staking system built on XDC. It's built by PrimeNumbersLabs, that is our parent company. It's a development company, and the biggest problem on XDC is the entry fee to become a validator. That is 10 million XDC. That is quite a lot of money for the most of the users. And another problem is that when you put your liquidity into the masternode, is only generating the 8 or 10%, depends if you are a validator or not, and you don't have access to that collateral. So we build that liquid staking, so you are liquid with your assets in XDC, so you are able to do lending, or you are able to do a borrowing also with this liquid staked token.
Perfect.
So I was thinking you leave. That's why I saw my screen. I was thinking it was alone. So yeah, I mean, the goal with Prime staking is to unlock all of that potential that the XDC network have, and to grow the TVL and the numbers. We have right now a bit more than 230 million XDC staked. That is that put us on the top one in terms of staking on XDC. And our goal is bigger than that. I mean, XDC is on a really growth path in terms of validators. You just need to check the numbers. And we are here providing that solution to all of the users on XDC.
Okay, perfect. That's quite, you made things very simple for our viewers today to start off this session. My next question would be walk us through what happens technically when someone stakes their XDC.
So I'm going to talk about the new version. Last version, it was a smart contract where you deposit XDC and you get minted the staked token, pxDC, and you get this token in return. So in the last version, you were needed to claim, but let's focus just on the new one, because it's what we are going to be from today to the future. So now when you deposit XDC, you get the staked token, and this staked token grows in value because it's I will say the word, it's a ARC 4626 standard. So it's a token that grows in value when the rewards come to the contract. So your XDC comes to the contract, and then you get the staked token. So the XDC sits on the contract until we reach the 10 million amount. In the moment that the contract reaches 10 million amount, goes to the validator of the XDC network. Now it's totally non-custodial. I mean, before we needed to withdraw that, to do KYC and to send to the validator and get manually the rewards and everything. Now we have been working on this system since last summer with XDC and Nethermind. So we were exploring the validator contract and how to make something that will talk directly with the validator contract of XDC. So we remove all of the human risk from here. So it's just two contracts talking between each other. So that XDC, in the moment that goes to the validator, start generating rewards. If it's a standby node, you will get the payment at the end of the month. So the value of your share of the staked token will grow at the end of the month, because it's when the contract for prime numbers will get the reward from the validator contract of XDC. I know it's quite complex to understand, but it's the best way to do it. So we remove completely the human part. In the moment that you withdraw your XDC from in this case, returning your shares to the prime staked contract, you will see that you are withdrawing more XDC than the one that you deposit. That's why it's growing in value, the shares that you are getting. So the ratio is not going to be 1-to-1. It will grow with the rewards to 1 point something. Even if you hold long time, it can be even bigger than that. So yeah, this is a quick recap about what happened when you deposit your XDC.
Yeah, that's amazing. I mean, a lot of I think if I were an investor, especially a small ticket size or a not a angel investor, I mean, it's very easier for me to stake XDC and get benefited from the rewards, right? You mentioned how much is it? Do I get it monthly or annually?
So the 4.5% that we are paying right now is annually, but the rewards are coming monthly right now, because it's when the XDC validators are paying. But in the moment that one of our nodes becomes a validator, you will see like every block how the rewards are increasing. So it's a price, it's a share that increases in value over the time.
Correct. So that's a great point. Again, I wanted to emphasize on that the rewards come monthly.
Yeah.
Excellent. And one
right
more
now,
thing
yes,
is,
let's see if all of our master nodes go to validator, and it's going to be per block.
Yes, great. So Arturo, you also described it as a non-custodial, right? So what does that actually mean, and how do withdrawals actually work in a non-custodial setup?
So this is the most important update that we did in the system. Right now, Prime Numbers is not holding XDC anymore. It's just the smart contract. A smart contract that is not being able to change. I mean, it's not a proxy or a upgradable contract. Is what it is now. So this contract is the only one that is managing the funds of the people that deposit. The only way to mint a staked token is by deposit XDC, and the only way to withdraw is by burning these staked tokens. And since XDC is coming from the validators, there is like new XDC that is not minting a staked token because it's coming from the validator. So that's the thing that makes your shares increase in value, because it's XDC that is not minting the staked token, because comes from the rewards from the validators. And about the withdrawals, if you are going to do a big withdrawal, can be the scenario where the smart contract holds a 5% buffer before sending to the validator 10 million. So can be the scenario. I'm going to put in the stream cases scenarios and all of that. That if you want, let's say you are staking 10 million XDC or 20 million XDC, and you want to withdraw all, there is a first in, first out queue. You will go to this queue, and until we don't pay that amount to you back, I mean, not us, let's say the smart contract pays to you, you will be the first in the moment that you arrive. So what happened in the contract level is that in the moment that this withdrawal gets requested, the smart contract is going to go to the XDC validator contract and will request the withdrawal of 2 nodes. We know that right now it's taking like 35 to 40 days to withdraw a master node from the XDC blockchain, and it's something that we are not able to change because it's built on the blockchain like that. So we are a big, making a lot of influence on XDC just to remove that. But let's see if in the future they can remove that. It will help us a lot. The liquid staking protocols will be really, really thankful if they can remove this timing limit of withdrawal.
Yeah, I do understand, and I can imagine the sentiments of the retail investors, especially in the crypto space. When there are rewards monthly, and obviously the next thing would be I'd like to withdraw, right? Yeah, I hope so. I mean, whatever you mentioned.
Yeah.
Another question I have, Arturo, because it's very interesting to know that we are giving the yield from staking, but where does it actually come from? And is that sustainable?
Yeah, Sandy. I mean, the price of XDC, it's what makes it sustainable, right? It's a coin that is really high in market cap. So the yield comes from the rewards that XDC is paying to the masternodes. I mean, to the people that is making the blockchain secure and validating all of the transactions. So the protocol makes this revenue from here is how it works. It's the rewards that are coming from the XDC network as a payment to the masternode holders.
Perfect. I mean, that explains where the yield is coming from. Yeah. And sorry, I just missed the point. Well, how is it sustainable?
So this will depends on XDC, right? I mean, they are paying 8% or 10%, depends on the standby node or validator node. So meanwhile, XDC is profitable and we have a lot of transactions in the blockchain, this will be sustainable, right? So since we are a liquid staked token, the rewards depends on the network. So if the network is doing amazing, the liquid staking protocol will pay amazing rewards also.
Yeah, that makes sense. That totally makes sense. And of course, XDC is doing amazing, and as we all know that. And it's got backed by a very strong community as well, and an institutional focus, especially on the RWA side. So obviously, it can't be not a perfect network to be doing liquid staking on. All right. So now we've spoken about wallets, withdrawals, sustainability, yields. So what about security? Because that's a very important aspect as well, right? And how do you talk about residual risk, honestly?
So we did a lot of audits, especially from Nethermind. We did a big auditing session with them just to make sure this is correct, and because there are a lot of money here, right?
Yeah.
So we want to make sure that the contract is extremely safe. The much the better. We test every stream case, everything. I mean, we have been doing audits since January when we had the first version of that. So it's not just one audit, it's all of the audits that we did the years before and the new ones. And now even with AI auditing, you can run trillions of points of view just to try to break the contract, right? So I think I'm pretty sure that this contract really probably will never have a exploit, and if the exploit comes, will be from something new like a quantum computers or something like that. I don't know. Something needs to happen outside here, but the risk is always there. But in every part of crypto, there is risk. I mean,
there is. Yeah.
You can destroy your holdings in seconds if you click a link or if you install something. So I think all of us needs to be extremely safe in this matter.
Yeah, but hypothetically speaking, I mean that's a very good point to discuss, because most of the investors are quite wary about their investments, right? When it comes to crypto, non-crypto, like they're most of the sentiments is like, I want my asset to be safe, secure,
Exactly.
to be growing multifold, and so what are the actual main risk a user takes on? If you can just highlight the risks.
So for sure, there's smart contract risk. I mean, a bug exploit, something can happen. Our job is to keep checking every time the security and the new hacks that are happening in other networks or other protocols. So we are like sure that we are safe. Then I don't know the validator and masternode risk. If a masternode underperform, the rewards maybe can drop, right? Then the risk of not having a sufficient buffer to pay your withdrawal in 1 second, right? I mean, this can happen if all of our masternodes are staked. This error will be easy this risk will be easy if they remove the 30 days withdrawal timing. In terms of, I don't know, regulatory, imagine one day the liquid staking becomes illegal. This can be another risk, but I don't think so because it's really decentralized and it's a decentralized network. And then for sure, the risk of the user of getting hacked. I mean, self-custody always have a risk. I mean, users needs to try to be completely safe. Don't use a mobile phone, use a hardware wallet. Things like that is one needs to be taken care of, but all of us, and also in the user perspective and investor side.
Yeah, it's better to know the risk and understand where you can go wrong. Better to be aware of these risks. I mean, it's good to highlight these risks to our investors and the community and the users who are planning to stake on XDC. Thank you for that, Arturo. Again, we have spoken about custody risk. I would like to know about some traction. So, because it's very important to understand where does the business stand today. So, what are the numbers look like today, and what do they tell us?
So we are growing a lot lately. It's true. When we started in 2022, getting the first masternode was hard. Getting the second masternode was impossible. And the last year we grew a lot. Right now we are sitting on 230 million XDC, 23 nodes. That is, if you check, is 10% of all of the XDC that is staked on the blockchain. And we have around 300 active users, like daily active users. So we are pretty happy with our numbers. But I think in the moment that this starts growing, it will go parabolic, and we will be able to reach, let's say, the goal. I was always saying with the team, imagine we reach 1 billion XDC staked. This can be amazing. So yeah, the traction lately is incredible. It's going really, really high.
Yeah, that's good to know, because obviously that's very important for a user investor who's going to be invested into staking on XDC, and those numbers really speaks of themselves as well. Okay, another thing is that when be it a retail investor in crypto or an institutional, there's another big area that is also need to be discussed about the peg, right? On the peg risk, what is the liquid staking token depeg, and can it happen here, like depegging?
So the pegging can happen only on open markets, not in our scenario, because there is no like free minted staked token. I mean, you always mint one staked token with one XDC. So from the protocol, you can always redeem it at least 1-to-1. So the peg can happen on decentralized exchanges or in centralized exchanges, and it's because the liquidity on the CEX or the CEX maybe be slow or small, right? So what most of the lending and borrowing protocols do, because the only risk I hear is in lending and borrowing protocols, you set the price of this liquid staked token to the price of in this case, XDC. So you are sure that if you are reading the price from an oracle, you are not going to liquidate everyone on a lending and borrowing protocol. But in terms of liquid staking, there is no risk of you getting your XDC back like less than that what you staked, because you always mint 1-to-1 and rewards come, so it's always going to be higher.
Perfect. So that's what I think the users and investors would be interested to know. What are the risks of depegging? And you've explained it nicely, Arturo. And the differences between being on a centralized exchange versus being on a DeFi protocol. That's amazing. Another thing is that I also remember that we had this discussion. You were saying that there was a migration from V2 to V3, version 2 to version 3. So what was the reason behind that? Why did that happen? And what was it informed to the users, and what should the existing users know about it?
So all of our users know about it. We did a lot of announcements, and we were talking about it during a long time. We made this migration from V2 to V3 because we want to remove all of the human errors, and also for the non-custodial. We need it. I mean, it's a must to remove the human part from the systems. We see what is happening in all of these bridge lendings everywhere, where someone is holding a key and they mint infinite tokens, and then all of the industry get hurt. So no, lately the only problems in crypto is in human level. So we say, okay, non-custodial, no human interaction, everything automatically, the validator contract talking with the prime staking contract, and that's it. So that's why we did the migration to the V3, because this V3 is the new standard of liquid staking on XDC, because it removes all of the risk that caused problems back in the days in this network. So we wanted to remove it completely, and that's what we did.
Perfect. So that's a very good move, and users were also well informed about this migration, and obviously just in the best interest of the users and the investors community of XDC. Perfect. I think I have got one last question. I'm conscious of the time. We are not going to be dragging this. I mean, obviously we'll have a second one, but this one has to be on time. So Arturo, one of the newer parts of the platform is a partner program, right? Very interesting. I would like to know more and how it works.
So this partner program is because we have a lot of centralized exchanges asking, or staking providers asking how they can use our protocol. A lot of them will use the normal liquid staking that we have, but there is a partner staking where this, let's say, a community, a centralized exchange, a masternode provider, whoever wants to have a liquid staking, they can do it through our platform, and they will become the owner of this contract that they are deploying. So they don't need to build anything. And with this, they can run their own liquid staking, non-custodial, just by using our smart contracts and our platform. So this is built for all of them. I don't know, imagine that you have a community and you are able to put 50 million XDC together, but you want to be the owner of the contracts, and you want to run your validators, and you want to do everything, but you want to have a liquid staking token. So you can do this with that, and you forgot about all of the risk of building a smart contract, building a platform, building everything. You just can use this, and that's it. So that's why it was built.
Very good. It's like an infrastructure as a service from Prime.
Yeah, you can call it a white label of the smart contract
solution. That's amazing. That's great. That's great. Honestly speaking, yeah, that's a great solution to expand not only, but also give the users, investor, the much needed peace of mind to focus on what best is needed for them, rather than building everything from scratch up. So Arturo, we would like to take one question from one of the community members. So here it is.
Mm-hmm.
So here's the question. Are you able to see the question?
Yes. Many people think staking simply means earning rewards. From your perspective, what is the biggest problem liquid staking actually solves for XDC holders? So I think most of the people, thinks that it's just for earning rewards, but actually also opens the door to you for liquidity. If you can get it on a lending and borrowing, you can just stake your XDC and then you can get a loan in another platform. I mean, if you check, I don't want to mention networks, but on Aave and Ethereum, you can have your collateral without selling, and you can get access to liquidity. This is one of the other benefits of that, and for sure it helps the network with the security. If you have a lot of masternodes, it's going to be more safe.
Perfect. Okay, great. Vin, I hope you've got your question answered. Moving on, I've got another question from the community itself.
If I have 100k XDC, can I stake on PrimeNumbers and 4%? Actually, it's 4.5. I will say that we are going to have a campaign that we are going to put this number bigger. So it will be more than 4.5%.
So currently it's 4.5, not 4, right?
Yes, 4.5.
So yeah, I think it's a question from the community again, just rephrasing what Arturo mentioned. It's 4.5%.
I want to mention something. Before we were paying 7 or 6, but there is a issue. I want to be like completely transparent. When we are like withdrawing masternodes from the validator in the old version, we are not earning rewards, but we will keep paying rewards to everyone. So how this can happen, right? The company was basically losing money during that days just to pay the rewards to the users. So this shows to people how deep we are into this system and how like we are focused on making this work. So now is lower the 4.5 just because this withdrawing timing where you are not earning rewards from the validator.
Right. Okay, perfect. I think, where can I find more details on this? Do you have any link you can share in the comment section?
Yes, primestaking.xyz, or you just can go to Twitter and find PrimeNumbersLabs. How I can put it here? I send the link of PrimeStaking, or also in the docs.primestaking.xyz.
Perfect. Yeah, I think we have taken all the questions available here. Yes. So, okay. What's the minimum? Okay, now, sorry. This is the last one. What is the minimum limit for staking and earning rewards? Is that a minimum limit? I don't think. I mean,
actually, there is not a minimum limit. You can stake one XDC if you want.
That's interesting. There is no minimum limit.
Yeah.
Perfect. That's amazing. I mean, that opens a door for more and more users and investors in the crypto space. This is amazing. And here you go. That's the compliment we got.
Thank you so much. We put a lot of effort into that.
Yes. Okay. So I think we've got most of the questions answered, and this is an amazing product, I would say. If I were a seasoned investor, a new investor, somebody who wants to explore crypto as an asset class, staking as a provision to get into investment, I would like to go for this, honestly speaking, because you can, as you rightly said, you can invest as low as 1 XDC and be a part of this, right? And also join our partner program, right? So that's amazing.
And this was built with the feedback of all of the community, because since we started, the Prime Numbers family is the union between team and community. So the product that you see today is the hard work of everyone since 2021. So now you see a really cool UI, everything built, but this was thanks to the community and the hard work of the team.
So absolutely. So XDC network ensures that we take the feedback from the community very seriously. We work on the feedback and we deliver a much, much more better product to you. It's always community first at XDC Network. Thank you so much, Arturo. This wraps up today's episode of the XDC APAC podcast. A big thank you to you for sharing insights into liquid staking on the XDC network. So we learned that Prime staking offers more than liquid staking, including partner staking, which is very important, XDC NFT staking, and a non-custodial spot venture for psXDC. Most importantly, it is designed to be transparent with on-chain verification, public documentation, and audit reports available for anyone to review. As always, the session is for educational purposes only, not financial advice. Do your own homework before you get into any kind of investment. It applies across the board. Verify on chain and only participate within your own risk tolerance. That's very important. Again, thanks for joining us on XDC APAC podcast. I'm Sunny Mohanty, and we'll see you in the next episode. Thank you, Arturo. Take care. Bye-bye.
Thank you so much.